We're now going to talk about donations tax and capital gains tax. This section is best also studied again once you've studied capital gains tax, as we're not going to go into too much detail on how to calculate everything around CGT here. So do flag this for when you have studied capital gains tax in more detail. We're going to look at paragraph 22 and paragraph 38 of the 8th schedule. The 8th schedule is where we discuss capital gains tax. Okay, so what you need to understand about capital gains tax is that you need to calculate capital gains tax if there's a disposal of an asset. So paragraph 11(1)(a) of the 8th schedule tells us that if you make a donation, that is treated as a disposal of an asset. So this means you must calculate CGT. Right, which is the next sentence also says. Now capital gains tax, you'll remember, is calculated by saying proceeds less base cost. What is the proceeds amount? The proceeds amount is treated as if it's the market value at the time of the donation. So understand, if I donate something to someone, I have not sold it, but proceeds, which is usually the selling price, will be the market value. So you treat it as we sold it at market value. Then we have the base cost. Now the base cost is the important part for you here. The base cost is usually the cost of the asset. So it's determined in the normal manner, which will be the cost of the asset. Plus, you will then add an extra amount to the base cost. So I'm going to just show it to you like this for now. Base cost will be the cost of the asset plus paragraph 22, whatever that amount is, and then that total forms the base cost. Right, so what is this paragraph 22? Paragraph 22 is given to you in the Act in this formula, so you can go and see it there. It says Y, which is this amount, that's considered Y, equals M minus A over M times D. M is the market value of the asset on the date of the donation, so right, it's treated as if it's sold for that. A is everything else in the base cost. So in this case, it will be that cost over there. So if you had other amounts there, it will be all of those other amounts. Everything except for this paragraph 22. And then D is the actual donations tax that was paid. Because remember, there's still donations tax when you sell an asset. So two different taxes, donations tax and then CGT. Now what is important for you to understand here? Right, which I'm just going to make a comment here. Because it says the person paid it. I'll make a note here. Only the person who actually paid the donations tax can add this to base cost. Now, who pays it? The donor. But remember, it is possible for the donee to also pay it if the donor did not. So you'll have to see who paid it. That person will add it to their base cost.